Good evening, ladies and gentlemen, boys and girls. Thanks for joining us today. This is a weekly program which we do our fellow colleagues, which we answer all the questions which we got asked this previous week so that it can add some value to you. We talk about property investment, we talk about selling properties, renting properties, anything to do with real estate. Today we have Phil with me from our Melbourne office.
Hello, everyone. Good. How are you, Navin?
Brilliant.
That's good to hear. Thank you for having me today.
No problem. What have you got today?
Yes. So I've got a couple of questions that for the past week that a couple of clients have been asking. Let's get straight to it.
Yep.
Yeah. So the first question was, this is an investment type of question. How do I determine the value of a investment property?
Yeah. So if you're shopping around for investment properties, there's few ways you can get the value. I mean, if you speak to a real estate agent, they have online systems in place where they can get a sort of a desktop valuation based on the recent sales. Even as an individual, they can go online and check typical value of the property based on the recent sales. But in reality, it would be best to go in and have a look at the property because sometimes the recent sales can be misleading because the property you're looking at can be of very high quality appliances or very high quality of flooring and things like that. So you really have to have a look at the property, but you can get a gauge on the range of the valuation by using the data available online.
Yeah, beautiful. So the second question is, what is the best real estate investment strategy for an investor or someone that's looking to get into the market?
Yeah, there's no right or wrong answer for that, I guess. It really depends on how we tackle that. It really depends on what our goals and ambitions are in terms of property investment. We might find a property investor who wants to have 25 properties by the time they retire.
Yep.
We might have another investor who wants to replace their income through passive income through investment properties. So we really have to understand what they are looking for, what they are trying to achieve, and then we strategize and come up with a strategy, a specific strategy for him or her to achieve that outcome. So there's no right or wrong answer, but it really depends on what the investor wants to achieve in the long term.
Okay. Yep. For our third question, so how does a landlord find the right tenant for their rental property?
Yeah, so finding the tenants, sometimes it can be tricky, but the key is to do a lot of due diligence on the application to make sure they have a strong income to support its fundamentals. If someone is earning $2,000 a month, and if they're applying for a $1,500 property, then you have a problem because they have only $500 to live in, which is not practical. So as long as their cash flow is good, their income is good, at the same time, should do a check on their background to make sure they're not blacklisted. They have not been in areas from the previous tenancies. So it's a mix of everything to make sure that it's a good tenant, a good income, and not a troublemaker.
Yep. Okay, going to also into that question as well. Another question is, should an investor hire a property manager? And if so, why?
Yeah, an investor should definitely hire a property manager. I mean, as an investor, they will not be stopping from one property, but they might want to do 1, 2, 3, 4 property. And if they want to manage it by themselves, it's going to be hard. Especially, it's going to be time consuming. It's going to be they have better things to do in their job or in their business rather than managing properties. So having the right team in place in your property investment journey is critical, and property manager is one of them to make sure. When you have the property manager, you have a single point of contact for all your property related matters. You get your statements on time, you get all the bills paid, everything, your routine inspections have been done. In case if there's a default in rent, week at hearings, week at participation can be done by the agent, and it can save a lot of time and money for the investor in the long term by hiring a right property manager.
Yeah, that's a good way of putting it. Yeah. Yeah. So this question here is, as we know right now, the property market is booming, especially with Melbourne and its mid-price, averaging around 1 million, and Sydney 1 million and plus. Should investors look into buying into Melbourne and Sydney, or should they look into alternatives such as Brisbane, Perth? And your thoughts on that?
Yeah, that's a great question. So right now, Melbourne is over 1 million, Sydney is over 1 million, and Canberra has hit 1 million as well. So, what investors have to realize is just because the median price is $1 million, it doesn't mean every property is $1 million. There's, so if you look at Melbourne, for example, there are so many properties which you still can buy for between 500 to 600,000. So it really depends on where you want to buy, and you still can get the right investment property in Melbourne or Sydney or Brisbane. It's always good to diversify yourself if you're maintaining a portfolio. But as an entry point, if the investor is entering into the market, Melbourne or Brisbane would be a good spot because of the cost factor. You can still buy something for about 500,000 to 550,000, whereas Sydney, you'll be starting around 800 to 850. So if you're a starting investor, Melbourne or Sydney would be the best way to start.
Yep. Also going into more depth with that question, another question for that one is it a good time for investors to buy into real estate right now, especially with the pandemic, or should they be waiting and seeing how the market goes?
Yeah, the pandemic has been going on since 2020, and everyone was thinking the market is going to crash and everyone halted, but the exact opposite happened. And I just read down some reports from all the major 4 banks, and what they're predicting is the market is still going to go up in the next 6 to 12 months, which will be the case. I think now we have about a 4-week lockdown over here in Melbourne. There's, I think, close to 8 weeks in Sydney already. When we come out of this, the market will boom again because there's so much of buyers waiting to buy. So if the advice to an investor is, if you're ready to buy, buy. If you snooze, you lose.
Yep. Okay, and this next question is a question that's very, very common, especially with my clients. So in terms of buying a house or house and land package, what is the cons and the pros of buying a house and land package instead of a house, or established house instead of a house and land package?
Yeah, so I'm sure they are talking from investment point of view.
Yeah.
So there are getting a already built property, the advantage is you can settle immediately. You can start getting the rental income immediately. The downside of that would be if the property is quite old. Now, property investment is a long-term game. You should keep it at least for 10 years. So if the property is already 20 years old, in another 10 years, it will become 30 years old. So whereas if you buy a brand new property, it will be only 10 years old. So, and from a tax point of view, there's a lot of depreciation benefits when it's a brand new property. At the same time, in terms of your outgoing repairs, will be much less when you buy a house and land package or a brand new property.
Yep.
So as a property investor, I think brand new properties are much better because it's a long-term game. It's not property investment is not a quick rich method. You got to keep and hold the property for a long, long time so that you get the passive income coming in, the capital appreciation is going in. So definitely brand new properties will be better.
Okay, yeah, thank you for that. Another question is, this one's in the process of purchasing a property. So, I mean, for someone that is a citizen here in Australia, and overseas investors. So what is the process in getting a property here in Australia in terms of citizen and a overseas investor?
Yeah, if someone is living here, it's quite straightforward. Once you want to get an investment property, I think the first step is to make sure you have a pre-approval in place so that you can borrow how much you can borrow, and then you know what your budget is, and then so that we can find an investment property which is in a good location, which gives a good cash flow, and which will be growing from rental as well as capital appreciation. And then you find the property, you finance it, and you buy it, rent it out, and hold it as long as you can. It's quite straightforward.
Yep.
From a foreigner's point of view, it's slightly different. When someone is ready, you pay an initial deposit, reserve the property, and then you have to go through something called a Foreign Investment Review Board approval process. As a foreigner, you need to get the FIRB approval from the government or ATO to buy a property in Australia, which has a cost associated with it, which is $6,350 if the property is below $1 million. And once this is done, it's the same process. You go through the finance process as an overseas investor, buy the property, rent it out, and then hold and sell when you want to. So only two things which will differ from a normal scenario. One is, as a foreigner, they'll be paying a higher stamp duty, and then they'll be getting the Foreign Investment Review Board approval.
And also in terms of getting a loan, so that they'll be able to get a loan from Australia as well?
Yeah, there are lenders out here who would fund using their overseas income.
Okay.
Yeah.
Yep. Okay, and this one is another very, very common question that I get asked, especially from my overseas clients. As a foreign investor, does purchasing an investment property in Australia help them get a PR?
The short answer is no. Unfortunately, there's no scheme where you could get a property and then get the PR. I know there are a few countries out there who would get that. So that question is quite common, I agree. But there's no mechanism for you to buy a property and get PR straight away. But having a property here will be a part of your asset pool, and it will be accounted for either you come through business migration or skill migration. So it's definitely going to add some value to you, but it will not get you the PR.
Yep. That's the questions. That's all the questions that I have.
Let's see what else we have got on the page. Right now, is it the best time to sell or rent a property? I'm in the midst of deciding whether to sell or rent. Well, if you're in Melbourne, if you're talking about right now is not the best time because we are at a lockdown. Nothing much can be done. We cannot show anyone property. So probably wait. If you're in a hurry, wait for a couple of weeks to see what happens. The outlook is. But if the lockdown eases away, definitely a good time to sell. The market is really hot. And yeah, I think we probably have to understand better on where you want to go. And then we can strategize to see whether you should be keeping it in the long term or sell it. But if you want to sell it, it's really a good time. Renting it out is not going to be an issue. We have to look at where your property is, but rental will not be an issue as well.
Yep.
Let's see. Why was the median price of Canberra gone up to $1 million? Yeah, Canberra is an interesting story. Canberra, I mean, although the apartments are quite cheap and affordable, the house prices are most of the places over $1 million. And the market is really hot. The rental demand is really, really hot. And Canberra is a really good market to invest right now. And if you really look at the difference of pricing between apartments and houses, it's probably the highest in all the states. I mean, you might get a 2-bedroom apartment for about 460 to 500,000, but in the same suburb, the houses would be about $1.5 million. So yeah, if you're looking at Canberra, definitely a good spot to invest on. I think that's all for today. Have you got anything else, Phil?
That's all. I don't have anything else from my side.
Beautiful. Thank you so much for joining.
Always, thank you for having me.
Again next week with another episode similar to this. We'll be talking about questions we get asked each and every week so that it will add some value to you.
Yep.
Until we see you next week.
All right, guys. Thank you.
Good night and have a great weekend.
You too, Nevin. See ya.